Okay, hi and Assalamualaikum. My name is Nur Afika binti Abdul Razak. So today we will present chapter 25, Other Assurance Services. So for the first part is Review and Compilation Services. The standard of compilations and review of financial statement called Statement on Standard for Accounting and Review Services, SSARS. These are issued by the Accounting and Review Services Committee of the AICPA. This committee has the authority equivalent to the Auditing Standard Board for services involving an audited financial statement of non-public companies. Because the non-public company, they are not doing audit. So as this SSARS refer to CPAs performing review and compilation services as accountant uh, and as an accountant but not an auditors. This is because the assurance provided by compilations and review is considerable below that of audits. And it also less evidence is required for these services and they can be provided at a lower fee than an audit. So, okay, next slide. So this is the relationship between evidence accumulation and assurance attained. So this illustrates the difference in evidence accumulations and level of assurance for audit reviews and compilations. The amount of evidence and the assurance needed for each engagement is not defined by the profession and therefore depends on the accountant's judgment. Okay, review services. So review services, Review services engagement allows the accountant to express limited assurance that the financial statements are in accordance with applicable accounting standards, including appropriate informative disclosure or other comprehensive basis of accounting, OCBOA, such as the cash basis of accounting. CPAs must be independent of the client for review service engagements. So there's a procedure suggested for this review. The evidence for a review engagement consists primarily of inquiries of management and analytically procedures. Substantially fewer procedures than those required for an audit. For reviews, accountants do not obtain an understanding of internal control, tax control, assess fraud risk, or do substantive of transactions or test of balance such as confirmation of receivable or physical examination of inventory. So the SSARS required the accountant to obtain evidence that consists of the following for a review engagements. So for the first procedure is to obtain knowledge of the accounting principle and practice of the client industry. The accountant can study AICPA, industry, guides, or other source to obtain industry knowledge. For the second procedure is obtain knowledge of the clients. The information should be about the nature of the client's business transaction in accounting record and employees. The accounting principles and practices used by the client and the content of the financial statement. And the level of knowledge can be less than for an audit. For the third procedure is make inquiries of management. Inquiry is the most important review procedure. So the objective is to determine whether the financial statements are fairly presented, assuming that that management does not intend to deceive the accountants. Inquiries must be made of the appropriate client, personal, and typically involve discussions, such as the following illustration inquiries, such as describe, not this one. No. Slide belakang. Yes, this one. Okay, Anthony, depan sikit. Satu slide depan. Oh, depan lagi. Yang ada macam arrow tadi. Alright. Obtain knowledge of the accounting principle, obtain knowledge of the client, and make inquiries of management. So there's a four such example of illustrative inquiries. First one is describe your procedure for recording, classifying and summarizing transaction and disclosing information in the statements. Second one is what unusual or significant transaction occur this year, including important action taken. Third one is each account on the financial statement prepared in conformity with accounting standard. And the last one is, do you have knowledge of an actual or suspected fraud? So that's the example of inquiries. So for the next procedure is perform analytically procedure. So based on the accounting standard, based on the accounting understanding of the industry and knowledge of the client, the accountant design and perform analytically procedures, and this identify relationship and individual items that appear to be unusual. And for the next procedure is obtain letter for representation. The accountant is required to obtain a letter of representation from members of management who are knowledgeable about the financial matters. And for the last procedure is obtain no, not last. The second last is obtain letter. Last one. Sorry, prepare documentations. The accountant should prepare documentation that is sufficient in detail to provide a clear understanding of the work performed. The review evidence obtained and its source, and the conclusion reached. Okay, next slide. So this is an example of review report. As you can see, there's a 4 paragraph in it, in the report. So form of report. No. Just example tadi. So there's a 4 paragraph. So for the first paragraph, explicitly notes that the accountant has conduct a review and identifies the entity and period financial statement subject to the review. So in the first paragraph, they will state the notes of accountant that has conduct a review and identifies the entity and the period of financial statement. Okay, for the second paragraph, the accountants will specifies that management is responsible for the preparation and fairness of the financial statement and for designing, implementing, and maintaining internal control relevant to financial reporting. For the third paragraph, the accountant should say notes that the accountant responsibility is to conduct a review of management financial statement in accordance with SSARS, and that those standards require the accountant to perform procedures to obtain limited assurance that there are no material modifications that should be made to the financial statement. So, and the fourth paragraph, the accountant should mention to express limited assurance in the form of negative assurance that we are not aware of any material modification that should be made to the accompanying financial statement. in order for them to be in the conformity with applicable accounting standards. And for the date of the review report should be the date on which the accountant has accumulated the review evidence sufficient to provide a reasonable basis for the report conclusions. Alright, next slide. Ini dah kurangkan. Alright. Okay. For compilation services, is defined in SSARS as one in which accountant prepare financial statement and present them to a client or third party without providing any CPA assurance about the statement. So many CPA firms prepare monthly, quarterly, or annual financial statement for their clients. These statements are usually for internal use by management, although they may also be provided to external users. The CPA is not required to be independent to perform a compilation and the financial statement. It can be issued without additional disclosure such as footnotes. So when accountants submit financial statement and expect them to be used by a third party, they are required to at least issue a compilation report that accompanies the statements. It is not permissible for the accountants to prepare the present financial statement to the client that plans to provide them to external user without, at a minimum, having satisfied the requirement for a compilation engagement, including the issuance of a compilation report. When the accountant does not expect the financial statement to be used by a third party, the CPA does not have to issue a compilation report, as long as the CPA documentation in the engagement letter with the client and understanding regarding services to be performed and a restriction that the financial statement are for management use only. So next. Yeah. Requirement. So this is the requirement for compilation review. So the compilation does not absolve accountant of responsibility, as they are always responsible for exercising due care in performing all duties. In compilation engagement, an accountant must accomplish the following requirement. For the first one is establish an understanding with the client in a written engagement letter. Okay. This is about the objective of the engagements, types, and the limitation of the service to be provided, including acknowledgement that the accountant does not obtain any assurance about the financial statement. And the second requirement is possess knowledge about accounting principle. This is about the accounting principle and practices of the client industry. And for the third one is know the client, including the nature of its business transactions. So this include the nature of the client business transaction, accounting principle and practices used by the clients, and content of its financial statements. So in the content of financial statement, the knowledge can be less than that for a view. For the rest requirement will be presented by Nadra. Thank you.
Okay, hi, hello. So my name is Nadra. So I will continue Afika. So okay. Know the client, including the nature of its business transaction and according to the content of its financial statement. So next is make an inquiry to determine whether the client's information is satisfactory, and The next is read the compliant financial statement and alert for your any obvious omission or errors in arithmetic and GAAP. And the last one is prepare documentation in sufficient detail to provide a clear understanding for the work performed. So move on to the form of complication report. There are three forms, which is complication with full disclosure, complication that omit substantially or disclosure, and complication without independence. So I will explain one by one. Complication with full disclosure is a complication of the type requires disclosure in accordance with the accounting standard, the same as the audited final statement or review. And I will show you the example of compilation with the full disclosure after this. And the second one is compilation, the omit substantially all disclosure. Show the appropriate wording that the accounting adds after the conclusion paragraph or the standard complication report when the accountant compiles statement without disclosure. In example, management has also elected not to present the statement of the cash flow. This type of complication is acceptable if the report indicates the lack of disclosure, and the absence of disclosure is not to the CPA knowledge, undertaken with the intent to mislead user. Typical this type of statement is used primarily for management purpose. The third one is compilation without independence. A CPF firm can use a compilation report with full or omitted disclosure even if it is not independent of the client, as defined by the Code of Professional Conduct when the accounting lack of independence and additional paragraph must be added as the last paragraph of the report that state we are not independent with the respect to example, we are not independent with the respect of Williams company. So here are the example of compilation report with full disclosure, and also um, compilation that omit substantially all disclosure. Okay, for all the three types of compilation reports, that following elements are also required. A report title that says Accountant's Compilation Report. The date of the accountant report is the date of completion of the compilation. Each page of the financial statements compiled by the accounting should state "See Accountant's Compilation Report", and also if the client fails to follow accounting standard, the auditor must include the same modifications in compilation report that are used in review report. Okay, so we move on to the learning objective 2, which is describe engagement to review interim financial information for the public company. The SEC requires that quarterly financial statements be reviewed by the company's external auditor prior to the company filing of the form 10Q with the SEC. The SEC also requires a footnote in the annual auditing financial statement disclosure quarterly sales, gross profit, income, and earnings per share for the past 2 years. Typically, the footnote in the annual statement is labeled unaudited. At the minimum, the CPA firm must perform review procedures of the footnote information because the same CPA firm does both the annual audit and the public company interim financial statement review. They are referred to as auditor, not accountants for the interim review. So second point is like you review SSARS in a public company interim review. including 5 requirements for the review service engagement. The auditor must first obtain knowledge of the accounting principle of the client industry. Second, obtain knowledge of the client. Third, make the inquiries of the management. Fourth is performing analytical procedure. And fifth, obtain a letter of representation. Also, SSARS review for the public companies do not do not provide a basic for expressing positive opinion level assurance. Ordinarily, auditor perform no test of the accounting records, independent confirmations, or physical examinations. However, the two types of review differ in the several areas below are the key difference. difference. Because an annual audit is also performed for the public company client, the auditor must obtain sufficient information about the client's internal control for both annual and interim financial information. Second is similarly, because the client is audited annually, the auditor knowledge of the result of the procedure is used in considering the scope and result of the inquiries and analytic procedure for the review. Third is under SSARS, the auditor makes inquiries about the action taken at the directors and stockholders meeting for a public company. The auditor reads the minutes of the meeting. The auditor must also obtain evidence that the interim financial information agrees or reconciles with the accounting records for the public company interim review. For example, the auditor might compare the interim financial information to the general ledger. So, okay, so the last point is the review is conducted according to the standard for PCAOB, and the review report makes no reference to SSAR. So I will show you the example of the report after this. So I explain first. Each page of the interim financial information which accompanies the report should clearly make as an audited. If the auditor determines the interim statement violate accounting standards and the report should be modified, the language of the modification is similar to the use in the report should be modified. It should be reviewed under SSARS, except that the auditor should state the effect of the debenture if the amount can be determined. The quarterly data reviewed by the auditor and included as a footnote in the annual audit statement should be labeled as unaudited. However, the separate review report for this information is not required. So the next slide, I will show you the example for the report for interim financial statement for the public, which is about the review, the consolidated balance of the sheets of the Rainier company, and they also stated they also telling about the statement that related, which is earnings and cash flow for the 3 months and 9 months periods at the end. So that's all for my part, and I will move on to the next presenter.
Assalamualaikum. My name is Adriana. I'll continue from Nadra. So I'm going to explain about the learning objective 3 about the attestation engagement. So basically, on um, audit 1 before, we have already learned about assurance services. where on chapter 1, it describes assurance services as independent professional services that improve the quality of information for decision makers. Basically, individuals who are responsible for making business decisions seek assurance services to help improve the reliability and relevance of the information which they base their decisions. So one of the category of assurance services that we have learned on audit before is the attestation services. So what is attestation engagement? So basically, CPA reports on the reliability of the information or and relevance of the information or an assertion made by another party. For example, when a bank requests a CPA to report in writing whether an audit client has adhered to all requirements of a loan agreement. So, I will explain first about the attestation standard. So, AICPA, they has issued 11 attestation standard that has been parallel to 10 general accepted auditing standard, which has been stated generally in sufficiently general terms. So basically, you guys can look at page 759 in the textbook. There's a table 25-1. They shows the comparison of the attestation standards and the generally accepted auditing standards. So basically, this table shows that the comparison between the normal auditing standard and the attest attestation standard. Sorry. Okay. So the most notable differences between these two is you can see from the standard 2, which standard 2 requires that the CPA have adequate knowledge of the subject matter over which there is attestation. For example, CPAs to attest to a company's compliance with environmental protections law, they need a thorough knowledge of the laws and methods that companies use to assure compliances. Okay, the next most notable differences you can see in at standard 3 that requires that the CPA be able to evaluate the subject matter against the criteria that are suitable and available to users. Again, using the examples of environmental protection laws, measurement difficulties or the lack of specific criteria may make it difficult for the CPA to conclude whether there is compliances. Okay, you also can just go through later all the other than these two in page 759. Okay, so I proceed. Okay, ASB of AICPA issues statement on standard for attestation engagement SSAE that basically normally called as attestation standard. This is they use this to provide additional guidance for doing attestation engagement. The audit standard boards attempt to differentiate between issues that should be addressed by auditing standard and those that should be addressed by the attestation standards, even though both are attestations. So in generally, auditing standards apply to attestation that deal with providing assurance on historical financial statement, which include one or more parts of those statements. This may include also audits of financial statements prepared in accordance with accounting standards or some other comprehensive basis of accounting, audit of only balance sheets, and audits of individual accounts. Okay. Before that. Okay. Sorry. before that, all other forms of attestations are addressed in the attestation standards. And the attestation standards are established by the Auditing Standards Board following the same process used for auditing standards. Okay, so next I will explain about the type of attestation engagement. So Auditing Standard Board, ASB, has decided not to attempt to define the potential boundaries of attestation engagements except in conceptual terms. This is because new services are likely to be arise. For example, PricewaterhouseCoopers has been attesting to the balloting for the Miss America contest for decades, but testing to compliance with environmental protection laws started only in recent years. So, AICPA and CICA, which is Canadian Institute of Chartered Accountants, has jointly developed assurance services that related to e-commerce and information technology. These group services are known as Web Trust and SIS Trust, which will be explained by the next presenter. They are performed under the attestation standards. In addition, the ICPA has developed specific attestation standards in the following areas. So in my slide, I have listed all 7 of the specific attestation standard. Okay, the first one is the prospective financial statements, reports on internal controls at service and organization, pro forma financial statement, reports on internal control over financial reporting for private companies, compliance with laws and regulations, agreed upon procedures engagements, and the last one, the management's discussion and analysis. So these standards are necessary for these type of engagements because CPAs already perform these services in sufficiently large numbers to need more specific guidance than the general attestation standard provided. However, the absence of specific standards for a type of service does not imply that it is inappropriate to provide such a service. Okay, so the next one, I'm going to explain about the level of services. So in this slide, you can see there's a 3 type of engagement, which has also the amount of evidence, level of assurance, form of conclusion, and distribution. So different type of engagement have different related forms of conclusion. So we have examination, review, and also agreed upon procedures. So for the next slides, I will explain each of the type of engagement. Okay, the first one is examinations. Examinations Examinations as results in a positive conclusions. In this type of report, the CPA makes direct statement about whether the presentation of assertions taken as a whole conforms to the applicable criteria. Okay, you can open in your textbook in page 760. There's one blue box that shows the figure 25-6. There's an example of an examination report under the attestation standards. Okay, so this figure shows an examination report written under the general guidance of the attestation standards. This is for an engagement to determine that the rate of return on a hypothetical portfolio based on a brokerage firm's buy, sell recommendation is correct as represented in the firm's promotional materials. A report on an examination is unrestricted as to distribution by the client after it is issued. This means that a client can distribute the information widely, including to prospective investors and for sales and marketing purposes. Okay. So the next one is review. So review provides a negative assurance conclusions where the negative assurance report CPA's report states whether any information came to the CPA's attention to indicate that assertions are not presented in all material respects in conformity with the applicable criteria. So There's under report, there's a two we can see two type type of it. Is the first one is the review report, where there's also review report is also unrestricted in its distribution. The next one is review engagement, where it is prohibited for most services where specified attestation standard have been issued. For example, prospective financial statement. This is due to difficulty of setting standards for the limited assurance provided by reviews. Okay, the next and the last one is the agreed upon procedures engagement. All procedures performed are agreed upon by the CPA, the responsible party making the assertions and specific persons who are the intended users of the CPAs. The degree of assurance included in such a report varies with the specific procedures agreed to and performed. Accordingly, such reports are limited in their distribution to only the involved parties who know the procedures the CPA will perform and the level of assurance resulting from them. The report should include a statement of what procedures management and the CPA agreed to and what the CPA found in performing the procedures. Okay. So at the earlier slide, I have shown you the type of engagement and related reports. And then the figure itself summarize that the reporting level. So this one, this figure summarize the reporting levels for attestation engagement. So next, I will pass my presentation to my friends, which are going to explain about the web trust and sys trust services. Thank you.
Okay, my name is Nur Emizana Fisa binti Zaidi. So I will continue to explain about web trust and sys trust service. So web trust and sys trust service are two main different things, which is basically they have a different slide of their work. So web trust service. Web trust service. Web trust service is clients are engaged to the CPA to provide reasonable assurance that a company website complies with the certain trust service principle and criteria for one or more aspect of e-commerce activity. This is also a specific service developed under the broader trust service principle and criteria jointly issued. So a web trust service is a principle that a website that meets trust service principle is eligible to display the web trust electronic seal in its order page, which can give assurance about in site's credibility and site's credibility. The website, the company also at least one or in every 12 months should update its and testing the e-commerce aspect to ensure that the client sites continue to comply with the trust service principle and criteria. The CPA firm also updates its report if the site does not comply. Can someone put the slide back? Okay. So I'll continue back. Mm. Okay, I continue back again to the web trust service. As you know, web trust service is a engagement to the CPA to provide a reasonable assurance that a company website complies with certain trust service principle and criteria for one or more aspect of e-commerce. So, web trust service also developed under the broader trust service principle and criteria that jointly issued by the AICPA and CICE. So when performing web trust principle, web trust assurance service, the CPA firm assess whether the company website is complies with the 5 trust service principle. As you can see in page textbook in 761, there's 5 trust service principle. The first one is the security. The security is to ensure that the system is protected against unauthorized access. This is meant for both physical and logical access. The second one is the availability. This availability practice is to ensure that the system is available for operation and use as committed or agreed. The third one is the processing integrity. The processes integrity to ensuring that the system is processing is complete, accurate, and timely and authorized in their website. So there's make sure that the time is on the real time and this is authorized. The fourth one is the online privacy. The online privacy practice is to ensuring that the personal information obtained as a result of e-commerce is collected, used, disclosed, and written as committed or agreed. So means there's privacy in online. So the personal data will not going in the wrong way. And the lastly is the confidentiality. The confidentiality to ensure that the information desired as confidence is protected and committed or agreed. So this is the 5 trust service principle in web trust that the company should meet its principle and criteria to make sure the website can have an assurance about the site's credibility. So next we will move to the sister service. So as organization become more dependent on information technology, this security ability and accuracy of computer system are critical. An unreliable system can trigger a chain of business event that negatively affect the company, its customers, suppliers, and other business partners. The sister service provide assurance to management, the board of directors of third party about the reliability information system used to generate real-time information. So in a Systrust engagement, the Systrust licensed CPA evaluate a company's computer system using trust service principle and criteria. The trust service principle is basically the same with the web trust service. So the Systrust service provide assurance to management, the board of director of the party about the reliability of information system used to generate real-time information. And in a Systrust engagement, the Systrust license CPA evaluate the company's computer using trust service principle and criteria and determine whether control over the system is exists. The CPA then does a test to determine whether those controls will operate effectively during a specific period. If the system meets the requirement of the trust, service, principle and criteria, and examination of level unqualified attestation the CPA will test to determine whether those controls were obtaining effectively during a specific period. And if system meets the requirement of trust service, principle and criteria, and examination of level unqualified attestation report is issued under AICPA attestation standard. So, the report may address a single trust service principle under AICPA or any combination of trust service principle. And the lastly is an organization may request a trust engagement for a system that is in the pre-implementation phase. For this type of engagement, the CPA report on the suitability of the design of control, and the report covers a point in the time rather than period of time. So for the web trust, difference with the trust, web trust is about the such assurance of the website for the customer, while the trust is for provide assurance to the management as the company become more dependent and on information technology, the security and availability of accurate computing are critical. So the next slide, I will pass to the next presenter.
Okay. A report on control at service organization. Many clients, they outsource some or all of their IT needs to independent computer service organization rather than maintain itself. So, auditor face difficulties when obtaining an understanding of clients' internal control because many control reside at service organization, and auditor cannot assume that controls are adequate because it is provided by independent IT provider. So, it is common for service center to engage with CPA firm because it is to obtain on understanding and test internal control of service organization and issuing report. So this engagement historically referred to as AS70 engagement, where it is the guidance for service auditor in auditing standard. So before I forgot, you guys can turn to page 762 for this topic. So we continue. The Auditing Standard Board moved the guidance to attestation standard, whereby it provides guidance for service auditor that engage by a service organization. Okay, there are two types of report, which is type 1 report and type 2 report. For type 1 report, it is about a service auditor express their opinion on descriptions of service organization system and suitability of design of control in the system. So, the auditor obtain and read system description that is prepared by the service organization and assess the description whether it is fairly stated or not. So the auditor will evaluate whether the management used suitable criteria in preparing and presenting the description. Okay, for example, the auditor will evaluate the description including the informations are initiated, authorized, recorded, processed, corrected, and reported in the description. So the other types of report, which is type 2 report, it is contained two opinion. The first auditor will perform tests of operating effectiveness of the control at service organization
in addition to procedure performed in Type 1 report. So, Type 2 report contain two opinion, which is description and suitability of the design of control, which is in the Type 1 report, and the other one is the operating effectiveness of control throughout the period. So, there are also two types of engagement. Okay, first one is Type 1 engagement, where auditor will perform a procedure to obtain sufficient available evidence and obtain reasonable assurance about suitability of design of control. And the other one is Type 2 engagement, where auditor will perform tests of operating effectiveness of the controls at service organization, in addition to perform in the Type 1 engagement. So that's all from me. I will pass to the next presenter.
For auditor to provide credibility to prospective financial information. So why they have a potential risk? Okay, because it is think about the future, which is we don't know what will happen soon. So we will always take a risk. Uh, okay, if auditors can improve the reliability of the information risk may be reduced in the same way it is in audit of historical financial statement. Okay. So next is okay. This is the two general type of prospective financial statement. Okay, the first one is forecast. Okay, forecast is basically is a prospective financial statement that present an entity's expected financial position, result of operation, and cash flow to the best of the responsible parties' knowledge and belief. Okay, it is actually like determine what is going to happen in future by analyze what happened in past and what is going now. Okay, I will give an example. Okay, a company management, government department, or an investor utilize forecasting to decide how to allocate their resources and prepare the report. They also use it to plan for the events and expense. So as far as company concerned, forecasting is mainly based on the predicted demand for the goods and service. Okay. The next is a projection. Okay, projection are prospective financial statement that present an entity's financial position, results of operation, and cash flow to the best of the responsible parties' knowledge and belief, given one or more hypothetical assumption. Okay, as an example, projected financial statement might assume the company is able to increase the price of the product by 10% with no reduction in units sold. Okay. Um, okay. The next slide is about the use of prospective in the financial statement. Okay. Prospective financial statement prepared for one or of two audience. Okay, which is the first one is general use. Okay, general use statement are prepared for use by any third party, such as inclusion of a financial forecast in a prospectus for the sale of hospital bonds. Okay, for next is a limited use. Limited use statement are prepared solely for third parties with whom the responsible party is dealing directly, such as the inclusion of a financial projection in a bank loan application document. Okay, basically forecast can be provided for both, which is general and limited use. However, projections are restricted to the latter because limited users are in a better position to understand the prospective statement and related to the assumption than other parties. Okay, as you can see in the page 764, okay, this is the story about a potential legal liability in prospective financial statement. Okay, which is there is a partner in one of the big four CPA firms state that his firm has decided not to do assurance engagement for the prospective financial statement because of the litigation cost. Okay, actually litigation cost ni is the overall amount of money that spent in the lawsuit. Okay, he report that his firm calculate their total revenue, which is not their profits, from all prospective financial statement engagement, and also calculate all legal costs, which is the legal cost is a money that helps to pay for the lawyer and court in the legal case. Okay, so the firm discovered that legal cost is exceed to the revenue, and the partner said that if the legal cost is exceed to the revenue, it is a bad business. Okay, so the next slide is, okay, this is the type of engagement. The type of engagement. Okay, AICPA attestation standards prohibit a CPA firm from performing a review of a forecast or projection, because a review service implies the CPA can be moderately satisfied about both the computational accuracy of the projection and also the assumption on which the projection based. Okay, so this is the element of the type of engagement in the prospective financial statement. Okay, the first one is an examination engagement in which the CPA obtains satisfaction as to the completeness and reasonable of all the assumptions. The second one is a compilation engagement in which the CPA is primarily involved with the computational accuracy of the statements and not the reasonable of the assumption. And the last one is an agreed upon procedure engagement in which the CPA and all users of the statements agree on specific limited attestation procedure. Okay, but on this chapter, it is only an examination of prospective statement is included. Okay. Okay, so this is the examination of prospective financial statement. Okay, there are four elements, which is the first one is they need to evaluate the preparation of the prospective financial statement. Second, they must evaluate the support underlying the assumption. The third, evaluate the presentation of the prospective financial statement for conformity with AICPA presentation guidelines. And the last one is issue an examination report. Okay, so this is on the page 765, which is this is the example report on a forecast. Okay, this figure 25.8 illustrate a report on an examination of a forecast with an unqualified opinion. Okay, as the figures shows, the CPA's report on an examination of prospective financial statement is similar to the standard audit report for audited financial statement, except for wording difference due to the unique labeling of the prospective financial statement and the inclusion of statement. Okay, so this is the three key distinction in the example of a report on in this forecast is the first one is a statement that the prospective results may not be achieved. Second one, a statement that the CPA assume no responsibility to update the report for events and circumstances occurring after the date of the report. And the last one, the date of the examination report. Because the report is a forecast, the date of the forecast balance sheet is after the report date. Okay, so that's all my part. I will pass to the next presenter. Thank you.
Assalamualaikum. So today my name is Siti Najam Razali. So today I will continue in the learning objective 7, which is agreed open procedure engagement. Okay, what is the agreed open procedure engagement? Agreed open procedure engagement is when the auditor and management or a third-party user agree that the engagement will be limited on the certain specific audit procedure, which is that it is agreed open between the two parties who are those two party, the auditor and the engagement. It could be the auditor and with a third party. So whatever that our third party or the management want the auditor to do, it is a specific procedure that we have to complete. For example, like to compute the IRR for a project, to compute the beta for a mutual fund folio. Second is about the agreed open procedure engagement appeal to CPA because the management or third party user specific the procedure they want done and the CPA issue a report describing the procedure agreed open and the finding resulting from the procedure. Which is here that the agreed open procedure they appeal to CPA because they are less risky than the projection in the forecast. Why? Because it is because when you are not really predicting the future, you we have no future liability if the actual result do not means that it's not an issue. To be more specific, the third party or the management is telling auditor what to do, so they specific the procedure that they want done, and then the CPA issue the report describe the agreed upon procedure engagement. When you should report what you should say, this is what we agreed upon. This is what they want the auditor to do, and an auditor would assure his or her finding. Okay. In the agreed open procedure engagement, there are also have two standard which is that have a primary professional standard addressing agreed open procedure engagement, which is that SAE and SAE have a same standard. We call as a mirror standard because they have the similarities. But the auditing standard deal with the financial statement, while the extension standard deal with the non-financial matter. In the agreed open procedure engagement, attestation standard, a CPA might calculate the internal rate of return, risk, for measuring the volatility and other relevant information of the interest to investor for a mutual fund. For the engagement under auditing standard, the CPA might not agree upon procedure on the cost sales account for a lease agreement. For example, like retail store commonly contract for such engagement when the store lease from the building owned on the basis for a percent of the gross sale. Okay. Next is about what you have to report in the report engagement. First is you have to mention that you are independent person and you do not have to even issue an opinion. So you only have to you should be it is the finding what you find means that you when you should report certain thing will have to be there you have to be independent so when you engage and it's agreed upon procedure in the report you have to mention that you are independent. Second is about the agreement. The agreements mean here that you need to have an agreement and the agreement will be spelled out in the report. When the report for agreed upon procedure would be long report, so you have to you have to mention in the report. Next is the procedure may not be sufficient as long as the client take responsibility. Mean here, when you have um, for the procedure may not sufficient as long as client take responsibility mean that procedure might not be sufficient. So you have to mention in the report if you do not feel the procedure were sufficient as long as the client take the responsibility. If the client wants to do something, you have to mention in the report as long as client take the responsibility. Okay. Next is about no responsibility to update the report for event occurring after the report date. Mean here when no one responsibility to update the report for the event occur, so you have to report in the report engagement. Okay. Then restricted use to specified party. Means here that it is a agreed upon procedure engagement. Means here that there has a restricted use to the specific party and you have to mention in this report. Whatever method that you use in that you use you have to be consistent because auditor use certain criteria. So if the client hire another CPA firm to do the same thing, they should come out with the close enough the same result. Lastly is about responsibility for the subject matter. Example like engagement. Okay, when means here that you have to mention in the report that you have to mention about the subject matter in the report. That's all from me. So I will give to the next presenter.
Hi, my name is Nur. So, the learning objective for number 8 is focus on the other audits or limited assurance engagement. So basically, it is about other comprehensive basis of thing, basis other than GAAP or IFRS, for which reports may be issued included. There are 4 types of basis. The first one is cash or modified cash basis. This focus more to precision, precision or attorney, and it is the cash basis, which means that cash receipt and disbursement, and modified basis is cash basis is followed except certain items like fixed assets. Next, the second basis is regulatory agency. For example, these are used in the uniform system of accounts that require some type of railroads or utilities and some insurance. So the third one is income tax basis. This is focused more for the small business SME. The same measurement rules for filing tax returns are often mentioned, even though this is not according to the AAP. The last basis This definite set of criteria having, for example, the price level basis of is applied to all material items. Shows next, what must the auditor do? First, the auditor must fully understand the accounting basis that the client is requiring. Then the auditor must acknowledge that the client follows basis other than GAAP or I. Then the auditor must indicate in the financial statement what type of basis they are using. The third one is the terms that are used in the financial statement must be changed according to the basis that the client used. So for example, balance sheet and statement of operations will be changed into statement of assets and liability arising from each transactions. Okay, next, specific elements, accounts or items. Auditors are often asked to audit and issue reports on specific aspects of financial statements. There are two common examples. First one is with trade or sales of retail store and shopping used as the basis for rental payment. The two is report royalties, state participation and provision for. Okay, there are two differences for the types of audit. First one is the methodology is defined by the items audited, and the second one is GAAP, stands for first standard, does not. So, I'll talk about methodology is defined by items audited, means that it is defined in terms of the element, the accounts or the items that being audited rather than the overall. The effect is to require more evidence that if the item being verified is one of the many parts of the statement. And the second type is GAS does not apply, means that the first standard of reporting under GAS does not apply because the presentation of the elements terms is not a financial statement presents with. Next is debt compliance letter and the reports. Auditor may issue reports on debt compliance and similar engagement as separate or by adding a paragraph after the opinion draft as a part of the report that express their opinion on the financial statement. Auditor must qualify to evaluate whether the client has met the provision in the engagement. This means that in the compliance agreement, the auditor are normally qualified to evaluate whether the principal and the interest payment made when due, whether the proper limitations were maintained on dividends, working capital and debt ratios, and whether the accounting records were adequate for conducting an ordinary audit. However, auditors are not qualified to determine whether the client has title to pledged property. These are legal questions and the Code of Professional Conduct prohibits the auditor from acting as an auditor. Point number 2 is auditor must provide a debt compliance letter only for a client whom the auditor has done audit for overall financial. Means that a debt compliance letter on a matter such as existence of the current ratio of 2.5 or better would be difficult to establish without having conducted a complete financial statement. The last point is auditor's opinion is negative in stating that nothing came to the auditor's attention that would lead the auditor to believe that there was. So these are the example of report on a class. We refer on page 765. This is the report on income tax basis. This is an example for the debt compliance report. And lastly, this is the primary category of other assurance services and engagement. You may refer to page 768. Alright, that is it from us. Thank you very much.